And joining us for a closer look on what's playing itself out on that market scene is Nick Kunze from Sanlam Private Wealth. Nick, always a pleasure. Good afternoon to you.
Good afternoon.
All right, I would say it's a bit of a meh of a start of a week. Keen to get your thoughts on this one and also what we could be contending with as the week goes along.
Yeah, a little bit of a soggy start to the week, obviously lacking a bit of direction with the US shut for President's Day as well. So obviously no guidance out of that. But that I think is going to be a busier week. We pick up with Nvidia earnings on Wednesday, got Walmart tomorrow. Obviously our budget locally in South Africa is going to drive direction of the rand as well. So it does get a little bit busier. So those traders are a little bit bored today. Don't worry, it's going to pick up from tomorrow.
I actually want to touch on the issue of our national budget here at home. Anything that the markets really want to hear from the finance minister?
Well, I think financial prudence is the first and foremost. You know, we need a bit of financial discipline. We all know that the debt is getting a little bit scary out there. Our debt to GDP is not where we'd like it. And our finance minister, to be fair, and the Treasury have got quite a difficult balancing act. Tax revenues, we know, will be down for all the reasons we speak about on the show. Also, the fact that, you spoke about there on your intro, these earnings out of our PGMs are very, very bad compared to they were 24 months ago. So those revenues are going to be light too. So we need to see that fiscal discipline if we don't want to see the rand, blow out even further. I mean, this morning it's looking a little bit nervous as we head into that budget as it's sort of nearing that 19 level.
We also will get some Fed minutes later on this week. I'm wondering if markets are anticipating about that at all. Are we hoping to see something from those minutes that we haven't already heard from the Fed?
I don't think the Fed will deviate much. I mean, where they had that pivot back in December, which caught everyone a little bit off guard with talking about rate cuts, but they've tried to rein that back in the last sort of month or so. And the inflation print, we saw that CPI and PPI last week coming out. That was a little bit showing inflation is a little bit sticky. The dot plots and certainly the sort of Fed funds implied rate indicating that markets sort of pulling back what they thought were going to be rate cuts. So I don't think it'll be much different from the Fed minutes. I think they're going to reiterate that be prepared to stay certainly a little bit higher for longer for now.
I also want to touch on what we're seeing coming out of Telcom. It's a very interesting one here. It does seem like Telcom is reporting less losses. I think things moving sideways at this point. And Nick, I see the share price is up today, so it looks like market participants are reasonably satisfied with what's come out of that company today.
Yeah, so Telcom, I guess business as usual. They continue to pick up more and more sort of the mobile side of things, now clearly overtaken the profitability compared to their fixed line business. So they transitioned that quite nicely. Obviously, the headlines that grabbed a lot of the investors and traders out there were the idea that they're going to at some point spin off the mass business. That is highly profitable business as well. So, and property, I guess, has been muted for a while, that their portfolio will be spun off as well. So, in general, I think well received, and that business continuing to sort of reinvent themselves, quite frankly, into more of our mobile placed business. So, well received, and you can see that in the share price today, as you said.
Keeping it local, Etel Tile. Nick, what are your thoughts on this one? I think it's just been such a difficult time for this business since that COVID-19 boom we saw in around 2020. And we don't know when the economic situation in South Africa will change enough for people to start renovating again. And that kind of puts Etel Tile in a very difficult position.
It does. Look, it's quite a thinly traded stock. So you look at the share price today, I think it's up about 5 cents. It's hardly budged. Difficult to get a picture of that. But if you drill down to their trading statement today or their results presentation, it was really every single line item was a little bit disappointing. In particular, the market looking, I think, for 32 cents dividend. It came out late, so 28, 29 cents. So that was a little bit light. Referring to, waiting for the South African consumer to sort of turn around and wait for interest rates to drop. So it's one of those stocks, if you're a shareholder, you're going to have to wait and see. But there's certainly, at the moment, the consumer in South Africa in that space a little bit under pressure, and those results reflecting it. Just not a great set of numbers. Even their lower end sort of CTM tiling business, again, also coming out a little bit light. So as I said, almost every single light item came in a little bit of a miss. So you're going to have to wait for that business to turn around in line with the South African consumer.
You mentioned the PGMs briefly, Nick. I want to get your thoughts on them. I mean, Amplat speaking about headline earnings down 71%. Northern, I think it's north of 95% there. These are astonishing numbers. We have seen investors driving these share prices down quite heavily over the last few months. I'm wondering if it could get worse from here.
Well, I think it's a bit one of those, that particular space is buy the rumor, sell the news. You know, how much is in the price already? You know, with some of these share prices down 65, 70%, I'd argue that you're probably near the bottom. And when you start seeing the likes of Sibanye, Mr. Froneman, Anglo Plats, Northern Platinum coming out and saying, excuse me, that you're going to, you know, we might have to sort of lay off, as you saw today, sort of restructuring. The next step, I think, will be they'll mothball one or two of these mines. I guess that will be near the bottom of the cycle. But difficult to, the question is how long does it stick down here? You've got not just the platinum price, not just the PGM price that's down. You've got things like the rhodium down 75, 80% as well. So it really is a tough period for them. But I would argue that we're probably near the bottom of that cycle now. It's more than in the price. And as I said, next step is after these cut cutting, you'll see this price hopefully start to tick up again.
I did some reading over the weekend, Nick, and I think a big theme that seems to be emerging in the United States and maybe here at home is that issue of a cost cutting. A lot of it looking like it's going to be that salaries and wages line item that takes a big hit here. I'm wondering if this could be widespread in South Africa as we see it in miners and in a lot of the big tech firms in the United States.
Well, so it's a difficult one to marry against the two because overseas you've seen, certainly in the US, let's use that as an example, you know, unemployment rate 3.6%. I mean, that is been the Fed's sort of main stickler. They're saying we cannot, you know, we certainly can't look at cutting rates until the unemployment level ticks up, and it's been stubbornly strong. But on the other side, as you've said, you had the tech sector laying off quite aggressively in that particular space. Their hirings that they did over COVID, Meta springs to mind, they've laid off almost 20% of their workforce in the last few months. So they are starting to come through. The US are going to start, as the cycle slows down, I think you'll see more of that. A little bit closer to home, also a difficult one. You know, it's a tricky situation, especially with the state-owned enterprises heading into election year. You know, they're going to push back on any sort of case of these miners and these, you know, trying to lay off staff heading into what's going to be probably a tough year. But overall, I mean, in summary, I think it's going to be a slowdown globally. And of course, what's the first thing that gets knocked in a slowdown is the headcount. And I think you'll start seeing that as well.
I actually want to move on to your stock pick in a bit, but before then, let me ask you about the issue of a slowdown. We've been anticipating a recession for maybe the last 18 to 24 months. And do you think it's starting to materialize, considering the news we got last week of Japan, the United States, and even Germany?
So I think we need to differentiate between the different sectors. So first of all, Europe clearly in a recession already. I think, you know, Germany, France, those PMIs, if you keep an eye on what those numbers coming out of France, ISM manufacturing, you know, certainly the Eurozone probably already in recession. We saw a technical recession called in Japan with those numbers last week, as you pointed out. The trick is like, where does the world's biggest economy, i.e. where does the US fit into all this? I think at some point there's going to be a recession coming. Yeah, but in my experience, difficult to call a recession when everyone's talking about it. Usually comes when you least expect it. I suspect some sort of a shallow slowdown, maybe towards the middle of the year. And of course, the point we haven't even spoken about yet is China. You know, where does the world's second biggest economy fit into this? They've come back from their week-long holiday this morning. That stock market on the back foot again. So tying in, I think, to the theme that yes, I think there will be a recession coming. Is it going to be a deep one? No, I think it's probably a shallow recession or a slowdown, but maybe towards the middle of the year.
Brilliant, Nick. Thank you for starting the week off for us. I'd like to get into your stock pick, but first let's reflect on those counters that have found favor with your industry peers.
We're going for Netcare this week. It's not something that maybe many would support, but there's been lots of headlines around the NHI in South Africa the last couple of months, with the bill having passed through the National Council of Provinces and now sitting on the president's desk while he looks for a pen to sign it. So there's a lot of negativity around private healthcare. We think Netcare is in a position where their margins are not normal at the moment, even coming out of COVID. There's lots of additional costs in there, including relating to load shedding. So if load shedding dissipates or subsides, there should be some margin expansion there. We're still expecting further activity through the hospitals, through the beds that they have, which will further lead to margin improvement. And they've also been investing in some strategic projects which are coming to an end, so those costs are no longer going to repeat, plus there should be benefits from those projects, all of which should lead to the margin expanding and earnings growing. And I think the market is not appreciating the potential growth in the earnings from Netcare, so we think it's cheap, and that's our stock pick for this week.
The one at the moment I'm actually going to go for is NVIDIA, which I think is a weird choice, seeing as though it's up 700%. I think it's certainly an interesting pick in the sense that I think their results come out next Wednesday, and I think that, for me, is the big potential market mover of the week. If they come out with disappointing sort of results, I think you're going to see a large section of the market have a bit of a correction. Having said that, if they do what they've been doing, and that is sort of almost beat and raise, I think the juice in the US market specifically, but this AI theme, is going to continue running. So very interested to see, and I think there's still value in NVIDIA if you haven't hold it, even at these sort of levels.
All right, Nick, keen to get your thoughts on those counters, Netcare and NVIDIA.
Okay, so let's start with the first one. I mean, Netcare, yeah, I mean, it's as the commentator said, it's got to be a little bit cautious here with national health insurance around the corner. Share price down about 4% year to date. If anything, valuations is cheap. I mean, it's sitting on a 13, 14 PE, so it is attractive from that point of view. My own personal points and that of our house is be a little bit cautious with the health insurance around the corner. We don't know how that's going to play out yet, but if you do want access to that sector, you are getting it at quite a cheap level. It's around about 13 Rand or 13 Rand 50 a share. So for those with a little bit of appetite for risk, probably not a bad level.
I'm keen to get your stock picker for today, Nick. Which counter are you loving?
Yeah, so it's quite difficult to pick in this environment. There's so much going on the political scale as well. But Grindrod's topped up for us. Grindrod Shipping. It's now purely a shipping business listed on the JSE. JND is the code. A lot of people thought that take a bit of a knock, as we all know the problems with logistics with Transnet, Durban Harbour, etc., Richards Bay. But they've got a big chunk. They own a third of it, of the Maputo harbour, in line with the Mozambican government and Davao ports. And that's taking up a considerable amount of transport that's not going through our ports, is now going through Maputo. And they continue to see record levels going through there. So a nice little hedge against our own problems. Our own locally based company, GND, doing reasonably well out of Maputo. So that's the stock we like.
Fantastic, Nick. An absolute pleasure having you with us this afternoon. Have a great week. That was your Midday Markets Update with Nick Kunze from Sanlam Private Wealth.